know that you do not need 20% down to buy a home? I know that's probably common sense to some, but I get that a lot where clients will reach out and say, do I need 20%? I heard I need 20%. I saw somewhere I needed 20%. And I wanted to tell you a story about a client, and then I'm going to get into some specifics. But I had a client that reached out to me a few months ago, and he was between a rock and a hard place. He literally had to be out of his place in about 45 days. His landlord was selling the property that he was renting, and he was basically forced to get into the house buying scene, whether he liked it or not. So he went ahead and got pre-approved. And the first conversation that we had was, man, I don't know where I'm going to come up with all this money that I need to put down in order to buy this house, so on and so forth. And so I set his mind at ease to let him know that you don't need 20% down. Now, if you're trying to avoid mortgage insurance, 20% down is required. There's other ways to mitigate or get rid of mortgage insurance, but we're not going to get into that specifically. But that's really where the 20% come from, because honestly, many, many years ago, you did need 20% down, but FHA programs, other programs came out to actually allow you to get in with as little as 0 to 5%, 3 to 5%. And we'll get into those specifics in a minute. But I calmed him down. I would let him know, hey, listen, we can get you in for a lot less than what you're thinking. Matter of fact, we have a USDA loan. Where are you looking? So we actually did some discovery on the call and realized that where he wanted to live and how much money he made actually got him to qualify for a USDA loan, which is a zero down loan. So he did have some cost. He had an appraisal he had to pay for, a home inspection, but we got the seller to pay the closing costs, and USDA is a zero down loan. So we got him in for very minimal towards the transaction, and he was tickled pink and obviously very excited. He was in a very tricky situation, but I was able to set his mind at ease. And I wanted to make this video because I know that this is probably something that comes across a lot of folks' minds. So there are many programs out there. That's why it's very important that you get with your mortgage advisor and actually discuss the options that are best for you and your family, because it's not a one size fits all. We want to make sure that we're putting you in the proper program, whether it's 3% down, 5% down conventional, whether it's 3.5% down FHA. VA is a zero down loan. USDA is a zero down loan. There are down payment assistance programs like OFA where you can go into a zero down situation with conventional or FHA, and now that's basically a grant given to you that is filed as a lien on the property and is forgiven after a certain amount of years. Won't get into specifics of that, but ideally maybe make a video in the future about OFA loans. But obviously we want to make sure that we're fitting the proper program for you where you're looking specifically, because again, it's not just something that's one size fits all. It's based on your credit, it's based on where you're wanting to live, it's based on how much money you have access to. Understand that down payment can come from your own funds, it can come from a 401k, it can come from a gift. There's many nuances and ways to come up with the down payment, but there's also programs out there that can help mitigate or maybe even get that down to zero as well. So obviously I was able to help that client. They were extremely, extremely excited. But it's very, very important that you get with your mortgage advisor and discuss the options that are best for you, and not just look online and say, okay, well, this makes sense, or this makes sense, or this is the perfect program for you. You want to talk to somebody that can ask the proper questions, do the discovery call to determine what's going to be best for you and your family. At the end of the day, we want to put you in the right loan, right? We want to put you in a loan that's setting you up for success and not for failure. Because again, we did a video recently about credit, and credit's the foundation. Credit, the awareness of credit is the foundation of where it gets started. But then you have to begin, once you've moved out of credit and you get your credit where it needs to go, then we have to have discussions in regards to employment and where your income is coming from in order to determine your capacity, the ability to pay the loan back. And then obviously talking about down payment, and where those funds will come from, or what loan program makes the most sense for you and your family in order to do a zero down loan, or those types of things. Because guys, at the end of the day, it's vitally important that you know all of this information in order to make a very educated decision based on your future and your family, because this is the largest purchase you're ever going to make, right? One of the largest purchases you're ever going to make. I'm sure you're going to have stair steps of different size and larger homes and those types of things if you're just getting started. But at the end of the day, it is a very large purchase and a very large commitment. So you want to make sure that you're not just throwing something against the wall to see if it sticks. You want to make sure that you have a plan in place. And by talking to a mortgage advisor that can get all of these puzzle pieces lined up for you so that you can set yourself up for success. So I hope that's been helpful to you. Remember, you don't need 20% down. That is not true. Get with a mortgage advisor. Let's discuss what makes the most sense for you, and we can look at different options and put you in the program that works for you. So with that being said, I hope you have a great, fantastic rest of your day, and we'll talk soon.